Welcome. Here we are leaving February going into March, and I wanted to open this video with the breakthrough to the other side, when to increase your average trade size. So trade size is everything, and this was my February homework, and this is why I'm putting it in the journal video, because to break through the other side, you've got to make a commitment of when and how you increase your average trade size. So I've been working on that, and it's been a lot more tough than I thought. It's taken a while, but things crystallized last week. It came together. I had the discipline for 5 days in a row to keep my increase on my average trade size, keep that fairly stable when I took my setups. So let's look at what it's going to take of how to know when to do this increase. Three things helped me break through to the other size, and I should say other side, other size. Either way, it was a breakthrough, but it took weeks and weeks to do this. So let me break it down in three ways. Number one, I had to go through several hundred actual real money trades with my system, especially after the holidays, to calibrate what kind of year we're in. And it's a very different market in 2022. So I did not really change my size at all in January. And then February, after surveying the lay of the land, I started to do the increase. And I went all the way in for the full increase, which was at least a 30 to 50% increase on the size with real money, and culminating in one of the best weeks I had, which was last week. Now it's about if I can continue. Step two was, after all these hundreds of trades and making them, I had to bank the mental and emotional confidence, and I will say capital. So you need to have confidence capital mentally and emotionally to make this change, because if you've ever blown up, if you've ever lost a significant amount of money trade, you put your hand in the fire, you know what that feels like. So you're brushing up against the fire when you increase size, because that increases risk. So you're going to understand you have to trust here that you will still have losing trades, but your overall trade success is one trade at a time, especially taking your setups. They've got to be your A setups, is when you do the increase on your average trade size. If they're not A's, I don't feel you need to have the increase in size. But when they're A setups, you need to be absolutely carnivorous. And the third and last is, you don't do this unless you're capitalized, and you will know if you're overextending. Bottom line, you should be doing something at 15,000, but at 25,000, that's going to be another level. And when you're at 50,000, that's at another level. So as you incrementally grow your trade account, you want to appropriately make sure you're sizing your trades on your setup. So that's it. Let's go to the benchmark, and let's go to a couple of charts. Okay, in the rear view mirror from last week, we've got the S&P 500 micros, the MES. It did clear into the green, nothing to write home about at 0.63. So this was the Friday close on February 25th. The M2K, that's what I trade, Russell 2000 small cap micro futures, 2038.50. And notice how it outperformed the S&P blue chips. So that's going to be something to watch here in the next couple of days to see if M2K is going to outperform. And then on crypto, I waited till the 27th, even though this is for the 28th. I just wanted to get a little bit more time and see where we were from the 18th Friday close. So minus 5.68 for Avax, Avalanche. I don't own anything, and with Bitcoin, negative 2.21. So we're getting back to that psych level on Bitcoin where 40,000. I think if we can hold above 40 whenever that happens, then 42, 45 can happen a lot quicker. But right now, it's about what's going to happen on the news feed next week, and we still have March Fed FOMC. It's all about inflation. It's all about interest rate. when it comes to the financial markets, it's absolutely all about Powell right now. So there you have it. That is the benchmark. Now we go to two charts, and I'm going to point out a key zone that I'm looking for. So we have the M2 24-hour, and this is the big time frame. I'm not going to go ahead and take a trade signal off this chart, but it's totally reference. And what I'm looking at here is a 2 green volume. So that's the first thing. So for Friday to close on the green, a continuation of Thursday, you got to back up to the 4 days prior that were all red volume. So what I'm looking for here, starting in March, which will be Tuesday, absolutely a possibility of strong institutional buying. But the retrace, I got to note the confluence blue rectangle. So we got mid Bollinger, the month of February 2022 anchored VWAP, volume weighted average price, and the 3 EMA. So this whole area from basically 2020 to 2010 is a zone of interest for me, and I'm booking this video on the journal that I'm going to pay attention to that. And let's go to the 120 minute on the next chart. All right, this is the go-to bigger time frame that I like to really look at more frequently during the day. I don't pay as much of attention once the trading starts on each session on the 24, maybe once or twice a day, but I'll look at the 120 very often, maybe 2 to 3 times an hour, just to see how things are shaping up. And now we closed on Friday. Was what got my attention was this distance. It's almost 60 handles on the mid Bollinger. So I've highlighted that, and I'm looking, of course, at how price is making a drive for the upper Bollinger. So where I'm at is focused on the zone for upper, the zone on when the mid and price reconnect, and how does that look on the confluence zone, where we already marked that out on why it was confluence on the 24-hour chart. So these are the 3 areas I'm going to be watching closely. And then the last thing I'll point out is these vertical zones. This was the break of when price in February drove above middle Bollinger by at least 14 handles, or 14 candles, I should say. 14 candle distance went above mid Bollinger. You saw 3 times it did this. And after the 14th candle, it generally started to pitch down and reconnect to the mid. So I'm just kind of looking. It's not a hard and fast rule, but we are so far above here compared to the other 2 times that it drove 14 bars above the middle Bollinger. Want to get an idea of, 2020 or a 2010 zone hit, connect in the next 14 to 20 bars. I think that's a high probability of happening. So there you have it, the 120 minute, and you've got the 24-hour. So trade them. Remember, not trading advice. These are just my own personal trading journal entries. Please hit subscribe and also hit the like. I really appreciate it. It helps the algorithm. Take care. Bye.